The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Friday, June the 5th. So we already had some great shows on TFNN. We just got a new lineup, and it's well worth checking it out. What we've got is John Logan starts us off at 8 o'clock. Then comes Larry Pesavento. Then comes Tom O'Brien. Then I come on 11 o'clock till noon. Every market day we're here. And that kind of sets things up, sets the stage for what to look at, etc. And, of course, then you've got follow-up shows all the way through. You got Daryl, you got Dave, you got Tom O'Brien, you got Andy Hector on Tuesday and Thursday. Hey, this is going to be a very interesting session. We got the Dow down 12 at 17,893, been everywhere. Look at the E-minis, gone all the way down to 2,083.50. Trading right now at 10 points high, 2,094, down 4. The pattern of lower lows and lower highs hasn't changed yet. We're real close to at least a bounce with an up day. But the trend based on the MACD and the slow stochastic still looks down. The 120-minute chart is a positive divergence. Now it's taken its I should also mention that in the Chapman wave trend gauge, we had a reading yesterday that's worked 3 times already. And what it says is that although everything could be negative, watch out, because the futures, E-mini futures, S&P E-mini futures, could have a very strong pop-up within 2 days. We actually had it immediately after the big sell-off yesterday, and the trend went all the way to, short-term trading index went all the way to 2.30. That's very high. And when I was speaking with Tom last night, I was talking about the pattern that we're looking at in the Dow. We'll come back to that in a moment. But in the meantime, back at the ranch, we were down really sharply early this morning, then came soaring back to a plus, then down again, then up. And now we're down just a little bit, kind of unchanged. So the Dow's down 10 at 17,894. S&P's at 2,096. You've got the comp index down up 4 at 50.63. You got gold down 4 at 1170. Silver's up a tad at 1611. Platinum's down sharply, down 5 at 109. Now, high-grade copper is trying to bounce this at 2.69. We haven't looked at the high-grade copper chart. Spoke about it yesterday. And let me just do this. HG, this is a continuous contract. And that is very ugly. Let me just move this 120-minute chart away. Look at that. It's making that arch formation. Remember, I bemoaned the fact that the monthly chart is just very negative, and that really suggests to me that there has been an economic slowdown. What are these interest rates, high interest rates, going to do? We'll look at that. Well, high-grade copper is getting real close to the 200-period moving average, to the Chapman wave inside track support. Whoa, we've got the next 2 weeks in high-grade copper could be telling us a lot, because if there's a break above the high that was made in May and it goes above 2.9, score 2.96, that's a nice turnaround. It means that you're going to start to break that long-term downtrend trend line. And if you start to close anywhere in the 2.57 area or lower on any weekly basis, be careful. So I've been talking about some kind of an economic slowdown. And what's really fascinating to me is that over the many years I've been in the market, when the good news starts to come out, that's when the market becomes the most vulnerable. The market loves to climb a wall of worry. And when the wall of worry is kind of dissipating, that's when you've got to be a little bit careful. Now let's go on and we'll look at this. We've got bonds. Now this is going to be very interesting. Why? Look at bonds. There's been a tremendous sell-off, and that trend line that I drew recently for the weekly chart of the continuous contract, right there. Look, you've had 1, 2, and this could be 3. This is the 3, what is it, and a domed house. 3 spikes in a domed house. This is the exact opposite. And what we're looking at here is that there's a chance that bonds, I don't have the chart. I'll look at it in a moment. So the two things, I want to look at the Dow, I want to look at the T-bond yield charts. I'll be back to that in a moment. But in the meantime, you've gone down below the left side low bar. That was, we haven't closed below it. We went down twice and we managed to close above it. And that's the low of the 12th of May at 149 and 1930 seconds. In the TLT, it's a little different chart. In the TLT, that was that 2-bar reversal. Let's go back to this one here. You got the 19th of May at 118.13. Yesterday, we did close below. We closed at 117.20. My rule in the Chapman wave H pattern, which this one is, it's actually more like an inverted V, but let's call it an H, just ease of expression. Right there, says that the left side low, if it gets taken out, it has that bar or the very next bar in which to bounce and close above. Well, it did that yesterday. So far, it's doing that today. So my contention is that the Japanization of our bond yields could very well go on for a while longer, and that this is just merely placing the TYX. I can do that. TYX, TYX. X into a range that it's been in many times before. Yes, in leg D in the weekly chart right there. And what's really important is if I pull the monthly chart up, you will see that we've been here since back in, was it September? It was December of 2008. We've been in this area in yields many times before. And we've even been much higher. We've gone all the way to 4.858, and we're trading at 3.068. So don't get carried away. This is just merely another one of those blips in the T-bond yield. I would say that I'd get carried away if the 32.98 9-period exponential moving average was taken out so quickly by next week. Then I'm going to say, hey, something else. Thank you, Marshall. 3 peaks and a dumped house, of course. And 2 other things that I wanted to talk about here is I wanted to say that the dollar had a screaming run to the upside. I know where it is right now. It's given back some of it. And gold, though, is not actually moving high. Well, the GLD has come back. It's at 112.15. It's up. It's down only 60 cents. It was down much deeper before. So have a look at this. I've been talking about these gold, dollar, euro, bond yields, bonds, all stuck in a trading range. If you can think of it as a trading range, and until we break the range, you can just say, hey, ho-hum, it's not as important as one would think. What really is important is the response of the market to the news. I don't care whether it's to good news, to bad news, whether it's Greek news, American news, whatever it is, yield news, doesn't matter. It's the response. And the VIX index is showing us the day is young. We're at 1456. If there is another pullback, nervousness towards the end of the day, 2 things to keep in mind. There's a pullback towards the end of the day in the market, and the volatility index is able to close on a not the daily basis because this is leg C, so that's okay. But if it can close anywhere in the 1480s, that would be nicely above. Let's see, let me just check 1480s. Yes, that would be nicely above last week's high bar in the VIX index. That'll suggest that this is the first time we've had 2 continuously green higher candles in the volatility index as a cup formation is being formed, as the MACD is starting to improve, as the histogram of this is the weekly chart, the histogram of the weekly chart is improving. The stochastic's gone from the single digits to the double digits now, but it's not over 20%, but it is a good sign. That's all I'm saying. That's the one thing. The other thing, the counterpoint, is if there is sudden a market rally. Certainly, if the Dow is up 770, if the Dow is even up 60 points right now. And the S&P was up 7.5 or 8 points. And the composite index was up about 12, 15 points. I would have to say, you know what? We're back in the range. We're just going from the one side to the other, to the other, to the other, and it's in a sideways rectangle formation. But if, perchance, we do close like minus 50 at the end of the day, the S&P's down minus 4 to minus 6 points, then all of a sudden you'll see that VIX start to rally, and that would suggest fund managers, and look at it now, it's at 68%. It should be at 80%. It's not. So it's still a bit weak technically, but the MACD is rising, and that would suggest to me that fund managers have started to buy the volatility index, expecting that the volatility will increase. Now, what do we mean by volatility? There's only one thing anybody means by volatility. It means the market's going down and the VIX is rallying. People don't talk about volatility. If we keep going higher, they just call it a bull market. But volatility is when you start to come down. All right. So now let me just go back to the currencies here. Just we looked at the dollar, the euro. Look, the euro is at this particular point given back a lot. This is really not a great pattern at all. It's just continuing the H, the lowercase h, that goes to an M pattern, lowercase m pattern, in the weekly and the monthly charts. And I need to do this USD JPY. It had made a peak D the other day. Look, this is an extension. A leg C in the weekly chart, very bullish. A leg F/B in the monthly chart. And now look at this. We had a peak D the other day. It didn't do anything in that peak D. The MACD was still very strong. The stochastic was at 88%. Actually, it was a little higher then. And now what we've done is we've either had an instant restart or we've gone to an E. This is really a little too high. So I'm going to put an E to an A and an F to a /B. Why? Because my contention is that when you go from a potential instant restart and it's going to only go to an E or maybe an F and turn down, F is not very high up. And in fact, F gives you a bit of a pop-up and then closes at the low in the very next session, smash to the downside. So far, there's just too many good technicals here. Let me just see the 120-minute chart. 120-minute chart says peak A, B, C, D. This is A, B, it's the same sort of thing. So, yeah, so far it's acting very well. This is a currency pair, USD, JPY. And that's what I've wanted to accomplish here. Now I want you to go quickly to the charts. Look here, the INDU, the Dow. Not a good looking chart, except the stochastic is getting a little bit oversold, but it just oversold doesn't mean to say it has to turn. And there's a trough E potential in the 120-minute chart. It gives you a rectangle formation. You could bounce from to the 17,930 to the 17,990s by Monday. But the weekly chart is really important. How we close it down the weekly chart, I'll talk about a little bit more later. So we've done it down. We did VIX. I said this to the dollar. I did. Now I will go, as soon as we get back, I'll go through some of the other indexes. But I also love to take calls. Basil Chapman, Tiger Technicians Hour. Dow's down 13. I'll be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. And a couple of things I just want to do. I had questions yesterday just as my show was closing, so I didn't have a chance to get to it. CMG. CMG is a Chipotle. I've got a hat-trick top made in the weekly chart. Sorry, the daily. That gap, island reversal at right there. The island reversal at 699.03 with a round number 689 low with that doji candle at the 21st of April spike high with island reversal gap down, huge gap down, and it's gone all the way down from the 669 level to the 601. That is 70 points, 11%. That's big for CMG. However, the question was about puts. Yeah, if you got puts way out, I would agree. Especially if they weigh in the money puts, I would agree that's the way to go. But you got to expect a bit of a bounce, yeah. And it's at 608. It could go to 615 to 619, make an arch formation, and then start on its next move to the downside. So it made a daily, which confirmed the weekly. The weekly all-time high is 727.79. It was way back over there, the double top, C1, C2. And at this particular point, that was a peak E that was made with a Chapman Wave 2-bar reversal, 727.97. And the next bar of the February high was 726.73. And now it's been under the 9-period exponential moving average for the third month. Month is not finished, but so far I'm saying, right? Now, so CMG, I would have a target of it as To the downside, actually, it's kind of just empty. It's just empty. I would say the next major support is at 582 to 569. 575 is really the actual bar that I would be looking at. And then if that doesn't hold, you would start to get a left side, right side price time match that would take you out into the August time frame that could take you even down to the 472 level. It's 200 points away. I mean, 200, almost 200 points from the top. So that's the way I'd be looking at CMG, with very limited upside action to the 630s, maybe 650s. Okay, that's that. Next thing was Netflix, NFLX. Netflix, yes. I believe that Chris was, she was, yeah, I think she was still long. And looking at the upside, this is I'm calling it leg E for now. It was not a Chapman Wave instant restart, but very close to that. So that should really have been, there was a plus sign, but that really should have been a down arrow with a very quick up arrow right there. And this is a brand new buy mode. That's the way I'm reading it right now. And you've gone to E/A, B, C, D, and this is either E/B. I'm calling it E for now, just because of the way the 120-minute chart is acting. A, B, C, it's really close. It's really close to some kind of a consolidation, but it's definitely not a short. But I would not add to any position at this particular point. What I would do is I'd raise the stop on my core position. I'd raise the stop on a third of my core position. And that stop would be about a 4-point stop. If you're taking out around about the 626 level, I'd say that is a position I might or might not put back. But if Netflix over the next 3-4 weeks drops below 611.54, I would just hold off. I would not do anything. I'd actually start looking at my core position, whether I should lighten up there. But if at any point by this coming Wednesday afternoon, Thursday afternoon, next week, if Netflix is holding really one and has hit 635, you should still be in that 1/3 position with a trading stop. I would still use a trading stop of 5 or 6 points. Okay, so now let me do something else. So let me go to this. That was that. Other question I had was Zoe something or other. Zoe, I think it's a restaurant, is it? Yeah, this is a great spike, gap up. I don't know if there was news today, but it's a really great spike because it's gone above the recent A, B, C, D peak E top with the Rogue Wave F right there. And that what I said was that on the 16th of April at 11:25, I was asked the same question. It was at 34.40. I said, doing well, needs 35.30s by Friday, or it just goes sideways. Where was the 16th? 416. Oh my goodness, that was way back there. 416, right there. And look what happened. It didn't get there. Went to peak C minus and plummeted all the way down to 30.02. This is a great move from that level, so 20%. So it's at 35.25. Today's high was 36.32. So let me just do two things here before I go to our callers. I just want to say, so Zoe's right now should go to leg D. There could be an inside buy signal with the 120-minute chart. A, B, C, pullback, yes. So we could see the 30-minute chart give another a pullback, and then an A, B, C, D to the top, make a nominal new high of D, and then you've got to be a little bit careful if the market is pulling back. But it looks like the monthly chart wants to go to a C and a D. It's an IPO, Zoe's Kitchen Inc. I'll be right back with market.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, and we've got Mark and Fort Collins on the line. Hi, Mark. How are you?
Good, Basil. How are you?
I'm good. Can you give me 1 second just to finish a couple of thoughts, and then we can get to your question, because if I don't, I'm in the ranting mood right now. I just got to get it out.
No problem.
So let me just do two things, if you don't mind. One is, I haven't had a chance to talk about this for a while. Well, I've had a chance, but I haven't really spoken about it. I find it absolutely shocking when I hear on the news every day that our government has been, we've been broken into, we've been hacked. To me, that is almost like warfare. That's number one. Number two is, I cannot believe that a private server, I'm not going to mention any names, but a private server of one of our most important officials of the last, well, she hasn't been there for a little while, but 60,000 emails. And I just can't believe that what's going on here. The press, the more people there are, the easier it is for the press to maneuver one's thinking. And I can't believe that we've been making a fuss about someone's, someone's change of sex, even though he was one of the greatest athletes at one particular time. And it gets front page news. And this, that is so important to the integrity, it's got nothing to do with politics. It's to do with the integrity of the country. How can we allow this to happen? What is going on with the millions and billions that are being spent that you can't even put up firewalls? And beyond my comprehension, and that someone is not being every single day. There should be a question as to where is the server, what is going on, what is being hacked. If the government's computers are being hacked, how can a private, not even a private citizen, someone using their private computer, how can they just go as if nothing's happened? And that person makes the choice to delete 30,000 and keep 30,000. It's got nothing to do with politics. It has to do with the integrity of the country. I got that out the way. Mark, how are you? What would you like to look at?
Great rant. I agree with you. So I'm looking at just setting aside a certain percentage of my portfolio into some metals, gold and silver, and I'm wondering what you think about gold and silver, and is it a time to maybe start wading into that, or does it look like they're still doing kind of HM type patterns and gotta wait?
So okay, one of the things that I was thinking about, I've been thinking about a lot, because someone that I highly respect has been talking about the gold stocks for a long time. He's not a person who anybody knows the name of. He's just someone that I know very well, and who's just an incredible analyst. And he's just done it privately for his 76 years or whatever, how old he is. And he had said to me, and he does a really good analysis in Elliott Wave, so I always respect what he says. Even though we might not agree, I always respect it. And he had been talking about, from November, December of last year, that some of the gold stocks were looking good, and he was expecting, although he expected lower gold prices, he thought that the gold stocks would hold well. Now, some gold stocks have held well. You've even heard Tom O'Brien talking about the gold stocks, and he's shown that some of the gold stocks have held very well, despite the fact that very often gold prices have dipped quite sharply. But if I look at my chart, and I do this on a purely technical basis, not even thinking about the fundamentals when I look at it, although the one fundamental that sticks in just right in my head there, it sits there like it just won't go away, is the statement I made 2 years ago, I think it was, that when I start to see for rent on those little gold stores that have this big sign that says gold bought and sold here, when I see to let or rent or looking for new business, I'll know that gold has made its major low. It had a monster move. I remember back in just before 2000, I think it was, I got a buy in the XAU at 44 or 45. I don't remember what it was. It was an amazing. And that XAU screamed to the upside all the way through to 2011. Now what we've got is September 2011, gold makes a peak F top in the monthly chart. It's been a very slow decline. It's been a drips and drabs decline. But if you look at the chart pattern, it's very clear that it's made the Chapman wave lowercase h to a lowercase m and a breakdown. Lowercase, and that breakdown occurred in late 2013. Then it goes again with a much smaller lowercase h, lowercase m, breaks down. Now it's making another lowercase h, and it can't even get high enough to make an M pattern yet. And at 1168, I've had for a long time the low of February of 2010. Well, it's a continuous contract, so the price will be different if you're looking at it in any other way. I've got a price of 1090. That would have been something different at some point. For instance, I've got the high in September at 1949.70, but in fact the high was 1956.30 because it is a rolling contract, a continuous contract. It means that the price will change, but never the chart pattern itself. So when I say the high of September, that was the high, whatever the price is. So as I look at it right now, there's a flat MACD, and in my work, a flat MACD implies that the directional move of the last trigger point remains in place, and that means on a monthly, I'm in a major monthly sell mode, number one. Number two is stochastics at 21%. With all the rallying that happened just recently, gold couldn't go from that little doji low of 11th, well, it's called the low of the 28th of November of 2014. So I've got it at 11.34. Only went to 13.10. Well, I mean, that's leg A, and then it fails. I've had 3 A's that fail. Now, this is something that I continue to look at. And if I extrapolate the technical data that I'm looking at right now, the fact that we've used time rather than price says either one of two things can happen. First of all, the upside has to be limited until there is a trigger point where gold becomes a currency of fear. It's either that, and that I think would happen if the banks go through a big problem. Haven't had a chance to talk about it, but the bank index, the XLF, is holding pretty darn well. We happen to be long in my opening call, the XLF, and the reason is that I've been talking for a long time saying that the financials could benefit if rates do pop up. That's number one. Or number two, as a lagging indicator, having gotten so many things right because of legislation, they should be benefiting later in the year. So that's something that, so I don't see the gold, the fear factor becoming important as it relates to the banks. So that's no, the financial crisis, I think, is going to come from elsewhere. We saw that the Greek fiasco that's unfolding right now has a chance to take us lower in the general market, because you've got to have a theme, and that theme has to be consistently coming up. You can't have a hiatus of 10 days or 2 weeks, and then the theme comes back for an hour and a half. You've got to have it over and over, and the market has to respond negatively to that theme. Here's another thing. The H pattern, you remember I spoke about this way back, maybe 2 years ago. I spoke about the pattern that's unfolding, and I drew it in, if I can find, hey, what happened to it? Oh, this is the GC contract. In the GLD, I drew it, and I drew the H pattern right there. That was back in July, August or something of 2013. I said you can go from that H to the lowercase m and a continuous, looks like a worm, and it just goes sideways. Well, so far, it's exactly what's happened. So I have to stick with the chart to say the chart is correct. It's been doing exactly what we're looking at. But here's the thing that I'm looking at. In a portfolio, if you have, let's just say you own property, you own your house, or whatever it is, an apartment, whatever it is, you own property. You have a portfolio of 401k or whatever it is that goes into an IRA. You have other cash that goes into shorter term market trades or core positions in stocks like an Apple or something, which gets me to Paul's question, which I'll get to a little later on. And now what do? You've got cash as well. The rule of thumb is always to have some gold. Now, I've always said, Larry Pesavento always talks about gold, maybe giving coins to your grandchildren. If you can think of gold as a slow accumulation of an asset class that you hope is a permanent insurance that you never have to use, especially being an American, that is really important. Now, let me quote, or let me just digress for a moment. When I say being an American, it means that in America, maybe in the gold rush of 1850s, you saw this happen when you had those major silver and gold crashes. In the next 50 years, you kept having them. That's one thing. But in other countries, almost all the other countries in the world, at some point, people who have had gold, as my father-in-law did when he survived in the war, way out in Siberia somewhere, he had gold in the heels of his shoes, little gold nuggets and things. And when he needed it, he used it. It was a currency of fear and a currency of currency. It didn't matter where you were, people would take gold. And we've never seen that in the United States. I only hope we never see it in the United States. It is not a good thing. But that's something that we look at. So as an overall portfolio, if you want to buy, what would you do if you were buying? Would you be buying gold coins? Would you be buying a gold stock? Would you be buying gold itself, futures? What would you do?
I was just looking at buying some GLD and some SLV, maybe in equal amounts at some point, or maybe the double of it, but not going into any of the triple stuff. So
okay.
Probably not.
First of all, if you're going to be doing that, I'm going to say rather double your investment, but go to the GLD. Do not go into the doubles. You don't need the deterioration. You don't need that at all. And you know what? Rather, instead of 100 buy 200, I would not buy 100 of the doubles if you're looking longer term. That's number one. Even though in the very end, the DOG 100% short the Dow is actually one of the best vehicles. It really tracks beautifully. There's even a degradation in that. So what I'm going to say to you is if you're thinking of the GLD or the SLV, I would probably start with a small amount in the GLD. And if you're doing it for the long term, does it make a big deal if you're buying it at 112 or you're buying it at 98? If eventually you think it's going to get to 230 because it's nothing that you want to touch, you just want to put it away and just have it as a very small part of your portfolio. Doesn't matter if that small part goes down 50% because you want it there in case one day it screams to the upside and it gives you protection, not just for your portfolio, but for life. That's really what you want it as. That's two separate things.
And what I was looking at is if you look at both the GLD and the SLV, it looks like if they do finish making their kind of H or M patterns, that the SLV might kind of end up in the mid-14s again, and the GLD might end up kind of down in that 10, testing that 109, 110 area again. And
104 even, right.
Target.
So now, here's the other thing. I have not ruled out what's going on in the dollar. If you look at the dollar, the way it bounced back here in this Chapman wave falling axe formation, the way the monthly is still holding, the way the weekly is saying, hey, that was a really good bounce back because now I can look at it and continue this rectangle formation. That tells me that although gold at best right now, I'm looking at, the dollar at best could try to test the downtrend line at 98.90, it's called a 99. And if it does that, it could just go nominally above the previous high that was made in March the 13th of 108.39. Just at this particular point, I'm saying I think the dollar upside is there, but it might be limited. That's saying that maybe gold downside, because it survived so long, it either is, I can tell you this, gold is either going to have a sudden 150-point smash to the downside and then start a whole brand new level of H's, or it's going to continue like this, just drifting along until it gets really close to the 1023 level of the 200-period exponential moving average. So I'm going to make two suggestions. One is that you could even nibble right now. It's just part of your portfolio. It's really not the trade. It's the position that you're looking for. But I'm trying to have patience myself for my subscribers. I want to see how the gold itself can handle a dip below, if it does it, below 1134, the low that was made in November. If it breaks under that, then the way it gets to 1090, that's going to be really important for me. And I would even suggest that as it gets closer to the 1090s, that's where I would actually want to be looking at putting some position on as a nibble, a starter position. So if you did anything now, I would do it very lightly, even though there could be a pop-up at any point, but I'd put it on very gently.
Okay.
I hope that helps you.
Yeah, that's good information. Thank you.
Thank you very much, Mark. And thanks for letting me rant. Let's go. Oh, we're going to go to Jerry in the Back Bay. Jerry, as we go out, you wanted to look at?
Hello.
Hello, Jerry. You wanted to look at?
USO. I'm short the USO.
I'll be right. Yep, we spoke about that. I'll be right back with Jerry in the Back Bay. Dow's down 3.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 1-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back. We're back with Jerry in the Back Bay. Hi, Jerry. How you doing? Oops. Music's there. Hi, Jerry. You there?
Yep.
Great. Yes. So you had analyzed crude oil before. Your contention has been for quite a while that there's a plethora of crude oil sources and resources out there. Crude oil should be going lower, and you're short crude oil, right?
Right. Yeah, I shorted it about 1980, a couple months ago.
The USO. Okay, let me go. I actually have the crude oil chart. Let me just do one thing right now. You did the USO. I just want to show the crude oil chart. Folks, this is a pattern that we've been looking at for ever so long. After that peak D top that was made in July of 2008, you've come down and made the H pattern that went to an M pattern and then broke down. Same thing. You remember, these are fractals. They do it in very short-term time frames. I wish I had a chance to talk about this. Oh, I made a mistake. I had a chance to talk about this, show the chart right here. This is the 15-second chart. of the S&P with the chart wave methodology right there on top. Can I get it? The reason why I'm bringing it up is that patterns repeat. Look, there's the H pattern. There's the M pattern. They just repeat over and over and over again. So let me go back here. And what we talked about was that if the left side broke, it could go 1-to-1 to the downside. Well, 1-to-1 to the downside in this continuous contract would have taken it to 45.30. When it went down to 46.38, it just missed it. Now it's having a little bit of bounce. There's strong resistance at 64.30 in the continuous contract. My suspicion is that once you've done the 1-to-1 or close, then you can have a bit of a bounce. That's what we're getting now. But there's a really good chance that within 3 to 5 weeks, the 46.38 low bar will be tested. If that's taken out, I would not be surprised if we can say that the high that was made in crude oil back in May of 2011 is a high that will not be seen for a very long time, well, very, very long time. But I like what I'm seeing. Now, in the short term, the short to intermediate term, you have got that support on the left side. So I'm going to go to the USO so that we're talking apples to apples.
Yeah,
and the USO has that left side support at 19.09. If by Tuesday to Wednesday of next week, this little bounce and retracement actually fails and there's a close, it must be a close under 18, around about 1880 to 1870. I want to see a close in the 1860s. If that occurs, all of a sudden the weekly chart is going to start to weaken. But I do see, you remember I said to you, I think I see a trading band that's forming in the USO because of the way the MACD strength is in the weekly chart. So I don't think it's going to go all that much lower. I think the mid-18s to the low 18s should be very good support, and then it could bounce back. But I think it's stuck between 22 and 18. Those are the parameters I'd be looking at. You want to see a break under 18. You want to see a close in the 17s, and that'll be a confirmation for you that even the weekly chart is starting to deteriorate. Hope that helps you.
I'm looking for an event. The Iran talks come up again in a week or so, and if Iran comes back on stream, that's another 500,000 barrels a day.
Now, another 5,000 words of ranting I could do, but I'm not going to do it.
and they have 10 million barrels in storage that they haven't been able to sell because of the embargo.
Right, and not only that, but we're actually doing very well. Yeah, internally. I mean, I think crude oil's day in the sun might have been. I hope so.
I just think the bounce got overdone. So I'm not even clear it's going to make a new low, but I do think that it got to be a crowded trade, at the commodity exchange.
It certainly is. Right. Hey, Jerry, have a great weekend. Thank you for calling it. Just as we go out, I promise as my subscriber. Okay, Facebook has made its big gain. Be careful now. It's getting a little toppy. And Apple still has a short squeeze, but it doesn't look good. Hey, folks, stay tuned for Nico and Paige. Great show coming up. Great shows all the way through. Check out my opening call this week.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.